Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Shreve here with a breakdown of the action in today's session, where three of the major indexes were able to eke out gains, Ken. And I know you've got a lot to say on the index action and a couple of stocks to watch. What do you have for us?
Yes, indeed. Not a great day for small caps, but the rest of the major stock indexes, they basically just traded right around the flat line, modest gains it looks like. But three stocks to watch today will be kind of a name out of China. I don't talk about China stocks very often, but let's take a look at PDD. The ticker is PDD. Also, DraftKings, which is setting up at a new base, DKNG, and in the financial sector, LPL Financial, LPLA.
Sounds like a plan, Ken. First, let's take a look at those major indexes. As you said, just slight gains here for the NASDAQ, S&P 500, and Dow, all up fractionally today. The S&P 500 up almost 0.1%, but not quite. And that was the biggest gainer today. So pretty quiet by session's close, but small caps taking a little bit of a hit today with the Russell 2000 here down 0.7%, undercutting last week's low and getting below that 200-day line. We'll take a closer look at that in a moment. But first, a look at the NASDAQ testing the 9.7 low early on in the session, but managing to hold above not only that level, but also the follow-through day low, the low of 829.
Yeah, I think there were some people that were hoping that the market would bounce back after the sell-off that we saw Friday when options expired, but it really wasn't much of a bounce today. We just kind of traded around the flat line most of the day. But as you said, Nasdaq is testing that recent low. If we hold there, great. If not, that could bring a trip down to the 13,000 level in play. Quite a ways to go to get down there, but we again saw some pretty harsh selling in the market on Friday. We know the uptrend is under pressure here with the NASDAQ below a lot of its key moving averages. So, I was kind of hoping for a better bounce today. We didn't get it, and we got the Fed meeting that starts tomorrow. So that will likely be a market mover. So we'll see what tomorrow brings.
Mm-hmm. We will. So would love to see the NASDAQ get above the 50-day line, 14,000. We even now have a trend line that roughly coincides with that level, that if we can make some upside progress, that would be interesting to see. But first, we got to get above that 50-day.
Yeah, definitely. I mean, we could get a nice little breakout out of a downtrend here, but that's not going to happen unless the Nasdaq can get above that 14,000 level. So maybe what the Fed says on Wednesday will have something to do with that. But right now we're still kind of stuck on a downtrend here with the uptrend under some pressure. So could have been a lot worse today, I guess. But we'll see how the rest of the week looks.
Yeah. Let's take a look at the S&P 500. Similar action here, Ken, and a pretty narrow trading range taking shape over the last couple of weeks here. So some pretty defined levels on the upside and downside.
Yeah, 4,500 for the S&P 500. So both indexes dealing with round numbers here. So for the S&P 500 to break out of this downtrend and to get back above its moving averages, it's going to need to move above 4,500. It could happen again depending on what the Fed says, but we're under pressure for now, and both the Nasdaq and the S&P 500 are still kind of challenged from a technical perspective. But hey, if money starts coming in from the sidelines and we start seeing up days and in heavy volume, that would be a good sign. But until we see it, we're still under some pressure here.
Exactly. Yeah, we'll be ready for anything. And here's a look at the Dow blue chips getting resistance at the 50-day line, also a level to conquer, and we've got a trend line setting up there as well. But Ken, the Russell 2000 small caps here looking pretty vulnerable.
Yeah, they fell below last week's low. You can see that still barely clinging to that 1830 level that was set several weeks ago. But with the Russell 2000, you've got that 1800 level kind of in sight here. So we'll see if more weakness comes into the market. Possibly the Russell 2000 pay a visit to that 1800 level. It's clearly the weakest index at this point. I was looking to see what caused a lot of the selling in the Russell 2000 today. Just saw a lot of biotech stocks down 8-10% in the index. So really couldn't point to one or two companies. Just a lot of small biotechs under some pressure.
Yeah, and here's a look at IBB, one of the biotech ETFs, down
Yeah.
almost 1.1% today. XBI, this is the other one, down 1.5%. So yeah, definitely looked like that was a weak area today. Let's take a look at the 10-year yield. Here's 0TNX backing off highs. And what do you know, right at that resistance level reached on 822, right around 4.36 and change. So backing off a little bit, but Ken, still at elevated levels.
Yeah, it's still holding near highs. That 4.36 level obviously is resistance to watch right now. The 10-year yield got up pretty close to that level, reversed slightly lower, but the lower bond yields really weren't much help to the market today. We just kind of, again, traded around the flat line, and also the UUP. I know we're going to look at
Yeah,
as well.
we'll go there.
Yeah, that one is just refusing to give up any ground here. You can see that big breakout last week for UUP really didn't move much at all on Friday, and down about 0.2% today. So this market is still kind of struggling with this strong dollar. If we can get some weakness in UUP and see that dollar index maybe start to head lower, that could provide a bid for stocks. But the way UUP is looking right now, it's still on a strong uptrend.
And in terms of market breadth, well, the Russell 2000 is one, but also RSP provides another look with the S&P 500 equal weight ETF here, down 0.7% on the day, and now back down to the 200-day line. It got support there previously. Will it hold this time?
That's the big question. I mean, the S&P 500 only up 0.1% today, but again, this kind of breadth that we've been talking about in the market, the equal weighted S&P 500 ETF down about 0.7%. So looking at breadth overall in the market, declining stocks almost beat advancers on the Nasdaq by 2 to 1. The ratio was a lot less on the NYSE, where decliners only had a small edge over advancers. But that RSP, I think it's very telling to see the entire index up 0.1%, and this down 0.7. You could see there was a lot of selling under the surface, and as I mentioned in the notes, a lot of growth stocks down to 2 or 3%. Growth stocks that have been leading the market were under some pressure today, and probably weighed on that RSP.
Well, the energy sector has been in focus in recent months, so let's check in on XLE. Managed to eke out a gain today of its own.
Yeah, this is potentially problematic for the market. I mean, oil went up close to $92 a barrel today, and we're talking about inflation. And, out in California, that 87 octane gas is up close to $5.20 a gallon. So it's getting pretty expensive to fill your car out here. And just, with oil prices as high as they are, I mean, we're kind of near the end of the summer travel season. So maybe we'd expect to see some softness in oil prices, but still very strong here. And the XLE in a strong uptrend, and really not showing signs it wants to go down, at least not yet.
Yeah, and on the cusp of a pretty major breakout. So if that happens, maybe not so great for the rest of the stock market, but maybe a good sign for energy stocks if they can keep it up.
Could be. They've been leading the market for quite some time, but this whole inflation story, when you have high gas prices, that's not helping the inflation picture much. That can curb consumer spending going forward, especially if gas prices stay high here. So we'll see if oil can pull back a little bit here. It's been on a big run, and again, we've seen that outperformance from several oil and gas stocks up to this point.
Now let's take a look at China stock PDD in the retail internet group. Some really nice tight trading action taking place over the last couple of days of trade, just under that century mark, Ken.
Yeah, this is still a stock that is under accumulation, and we talk about the headline risk out of China, and China stocks don't look nearly as good as they used to. There's been a lot of, regulation concerns in the country, but a lot of that looks like it's in the rearview mirror. So if you're going to look at, China stocks, I think PDD is where you want to look. It had a nice gap up on earnings, and you can see that bottom line and top line growth, heavy volume gains as the stock went up over 100, and it's been pulling back in mostly light volume, but really finding support and trading tightly right at the 10-day moving average here. So to me, this brings an alternate entry into play, that 103.60, that recent high there. So, and you mentioned that the tightness of the trading. I mean, just look at over the past 5-6 trading days, the stock is just really seems to be comfortable trading around the 100 level. So if we can get a market turn here and maybe some new money coming in from the sidelines, PDD I think still has a chance of getting over that new buy point of 103.60.
Yeah, and some really nice sales and sales and earnings numbers over the last couple of quarters here, Ken.
Yeah, definitely, and you can see it's the stock also has plenty of fund sponsorship as well. It's kind of hard to find some of these U.S. listed China names with good fund sponsorship, but PDD is one of the leaders. Not a small company by any means. You can see that market cap north of 140 billion. So they're a giant e-commerce platform in China. The technicals look strong here. Again, there's risk in China, but this looks to be one of the better names in China right now.
DKNG is next on our list. DraftKings setting up a cup with handle here. Let's take a closer look at the daily chart, showing an upside reversal. So we have a handle, we have a trend line, and some support at 30, and the converging 21 and 50-day lines.
Yeah, probably the leader in online sports betting, fantasy, all that good stuff. So DraftKings, you can see the revenue growth. They're not profitable yet. They're right on the verge of profitability, but they've really been stringing together a lot of really strong revenue growth in recent quarters. So this is a good example of what it looks like when a stock sets up in a base. You can see it was on a nice prior uptrend when it broke out over that 23 level, and then it ran up close to 34, and now it's just kind of pulled back and is settled into this new cup with handle base. So the handle formed last week. You can see that red down week in the chart from last week. That's the handle, and it gives you a pretty clear buy point here of 32.65. So not sure the market is going to let this run, but again, if we start to see this uptrend resume and we go from being under pressure to really seeing new money coming in from the sidelines, this one still could work nicely.
Yes, it could. Let's lastly check in on LPLA. This group is ranked number 58 out of 197, and LPLA looks like it's hanging out here in a buy zone.
Yeah, it really looks great. And I was particularly encouraged by the price action today. You see, it tried to go lower, but there were buyers around that quickly pushed this thing off lows. It's still in the 5% buy zone here. Again, another financial where you don't have to worry about slack fundamentals. It's got a good, consistent track record of growth. It's a brokerage provider of investment advisory services. So this is a stock that is still in a buy zone here amid strong fundamentals. So it's got that good combination of fundamentals and technicals that we like to see. So back to the daily chart, you can see it's still holding in that buy zone here in that blue shaded area. And again, there were a lot of buyers in the stock lifting it off the 10-day moving average. So it still seems to be showing strength and support here.
Great. Thanks for that, Ken. And thanks to everyone for tuning in. It's MarketSmith Free Access Week right now. No credit card required. So if you want to check out the charts that we use all day, every day, go right ahead. If you are on the homepage of investors.com, there's a top banner that's talking about Free Access Week. So if you are so inclined, you should check it out. That is it for today, everyone. We will see you in the morning on IBD Live, investors.com/IBD Live for all the details on that. I know special guest David Ryan, who's on every Tuesday, goes through his MarketSmith screens every weekend. That's how he's staying on top of sector rotation and stocks setting up. So he'll bring his analysis tomorrow morning on IBD Live. Looking forward to that. We'll see you there, everyone, and we'll also see you right back here tomorrow at the close.